Good morning. It's come to my attention that a few of you are struggling with a couple of the transactions on the wrap-up project. So the purpose of this short video is to help walk you through some of the more challenging transactions. First and foremost, this requires an adequate understanding of the last few chapters. The last chapter, or actually the second to the last chapter on equity transactions, is one that often is challenging and requires extra studying time. If you see yourself struggling with the transactions on this wrap-up project, let that be a warning to you that you have some studying to do before your last exam. The key to many of the transactions on this wrap-up project is to track the number of shares of stock. Remember that whenever we pay any kind of dividend, whether it's a cash dividend or a stock dividend, it's always based on the number of shares of stock outstanding. We emphasize this in class. I think a few of you may have forgotten or you haven't adequately studied the chapter. The number of shares outstanding is equivalent to the number of shares issued or sold less the treasury shares. Don't forget that treasury stock is stock that we go out and buy on the open market and then keep in our treasury. You wouldn't pay dividends to yourself, so that's why the number of shares of treasury stock are always backed out to come up with the number of shares outstanding. So I've created a little Excel spreadsheet to help show how to track the number of shares. This problem began by telling you how many shares of stock were issued and outstanding. By those very words, that means that all the stock issued is in the hands of the shareholders. That means when this problem began, there were no treasury shares. How do I know that? Because again, it says issued and outstanding. So on my Excel spreadsheet that I just created, track the number of shares. You can't calculate dividends until you know how many shares are outstanding. So to begin with, this yellow highlighted part of the problem told you that there were 24,000 shares of common stock, 5,000 shares of preferred stock, and 0 sitting in the treasury. So as we go through the transactions, we're going to track the number of shares. The first transaction that caused students problems was the transaction on September 15th, where there was a small stock dividend of 2% declared. So again, the key to any dividend transaction is to compute the number of shares outstanding. So what I've done to give you some help is I've gone through, and every time that shares were issued, I highlighted them in yellow, and right now I'm talking about just the common shares. And then any treasury stock I've highlighted in green. Those need to be subtracted out as far as the balance goes. So on my T account, here's my beginning balance. And then on January 1st, it says we issued some more shares. So again, I'm not concerned right now about dollar amounts. I'm concerned about the number of shares. So my common stock on January 1st went up by 12,500 shares. Again, I'm skipping over the preferred right now and focusing on the common. No common shares here. No common shares here. Here's some more common shares issued. 20,000 shares were issued on March 15th through the purchase of the land. And then on May 1st, we started buying back our own stock. So on May 1st, you want to track the number of shares that you bought off of the open market and kept in the treasury. That's 1,750 shares. You had a bond transaction, you had a note payment, and then on August 1st, you sold 430 of those shares. So let me reduce the treasury stock by the transaction that happened on August 1st. That brings us to the first transaction in red here that was causing some stumbling. So it says declared a 2% stock dividend on the common stock. So right now I'm interested in the common stock. Anytime a dividend is paid, you have to compute the number of shares outstanding. So when I add up my common shares, I get 56,500 shares that are issued. Of that amount, we hold some of them. How many shares do we hold in the treasury? When I foot this T account, so in the treasury, I started off with 1,750, I sold 430, and so what's left is the difference between those two, 1,320 treasury shares. So again, how do I get the amount of the stock dividend? I'm going to come over here. I'm going to show that at that date, I had 56,500 shares issued. And of those shares, 1,320 was sitting in the treasury. The outstanding shares is always the shares issued less the shares in the treasury. This is called the shares outstanding. You'll need to do this every single time you see a dividend. So there's the number of shares that I need to record the stock dividend on. How do you record any kind of dividend? On the date of declaration, you have to set aside enough retained earnings to cover the amount of the stock dividend. Since there are 1,104 shares, you would multiply by whatever the market price was on that date. Let me go back to my Word document for a second. It says the market price on that date was $25 per share. So the debit will be to retained earnings for whatever that comes out to be. And you would have two credits. The two credits would be to the common stock dividend distributable. And the other credit would be to the paid-in capital in excess of par for the common stock. Remember that shares are always put on the books in the common stock account at the par value, and PIC would pick up any of the difference. That's how the transaction for September 15th, the stock dividend, would be recorded. The stock dividend that we just recorded happened on September 15th. This is known as the date of declaration. The date of record falls somewhere between the date of declaration and the date of payment, but there is no journal entry required on that date. The next journal entry on September 30th is where this common stock dividend distributable is actually sent out to the shareholders. That's known as the date of, in quotes, payment. It's not a payment of cash, but rather a distribution of additional shares. As shown on the screen in orange, on the date of payment, the common stock dividend distributable is debited to relieve it, and the credit is to common stock. Again, this is always at the par value. Don't forget to add those additional shares, those 1,104 shares in, to the common stock account once you make that journal entry. If you miss those shares on the next dividend that the company pays, you'll have an error. The other journal entry, which seems to be causing some problems, is on December 1st. Not surprisingly, this is a cash dividend. You need to follow exactly the same steps, which means keep your common stock account current with the number of shares. Again, as with any dividend, the key to getting this journal entry correct is to track the number of shares. And just like we did in the previous transaction where we had a stock dividend, we figure out the number of shares outstanding. Once again, this is the common stock issued less any shares in the treasury. For preferred stock, the same thing holds true. Don't forget that the dividend rate for the preferred stock was shown at the very beginning of the problem. Let me scroll back to that now to give you a further hint. As noted at the beginning of the problem, the preferred stock has a 4% dividend preference. So the way that you calculate the per share dividend to be distributed to the preferred shareholders is by taking the par value times the preference rate of 4%. That will give you the per share amount to be distributed. Multiply that by the number of shares outstanding to come up with the preferred dividend. The common dividend per share rate will be given to you. I hope that's enough to help you finish your wrap-up problem. Once again, you're not out there alone. I've had office hours every morning. Your tutor has additional tutorial hours, and there are instructor lab hours during the week where you can get assistance. As always, reach out for help. This is Professor Johnson signing out.